Welcome back. Right, so wow, very interesting. I was just looking at the Safari, okay, and I see a lot of contribution. So very importantly, right, I know some of you probably type in a few companies, right, but you realize that the power of community is that there are so many of your other friends who are also contributing to this as well. So again, you also start to look at what are some of the companies that that you didn't realize, or you didn't know, okay, and of course your classmate has actually provided you with the answer as well, okay. But of course, having said that, right, we also want to make sure that it doesn't mean that today you feel that this company has got risk, then that means definitely it's 100% got risk. Okay, again, it can be pretty subjective, similar to economic mode as well. Some of you, if you understand the business, you know that there's certain mode. If you don't understand the business, then of course we can just put it as there's no mode. Okay, so same thing. If you're not familiar, don't know whether got risk or no risk, of course, to be safe, you can put as high risk first. Because anything that's more conservative is always better. Right? But of course, don't be over conservative. Everything put high risk, then every company also cannot buy. Okay. Let's take a look at authority risk, right? So we'll just run through, okay, and see if there's any interesting company that we can actually take a look as well. Screen is being covered by some rectangle. Thanks for telling me that. Okay, I think, let me just reshare again. Right, should be okay now. Should be okay now. Yes, fantastic. Yep. Okay. Now it's good, right? Okay, yes. So let's take a look at the authority risk. Okay, authority risk, right? So we can see, for example, Philip Morris is a secret company, China company. Okay, LMT. Okay, this one, if I'm not wrong, it should be Lockheed Martin, right? So some of you will be wondering, what is Lockheed Martin doing, right? This is basically the all your fighter jet. Okay, it's actually from this company. So again, maybe you classify them as important goods. Some of us then classify them as harmful goods. Because all this is definitely more for wartime purposes. Then of course we have Tesla, Meta. Okay, let's take a look at any interesting company. Authority risk. I see a lot of China company. Okay, DBS. Okay, yeah, I think I was talking about the banking sector as well. Okay, Bank of America, Google. Okay, marijuana stock. Oh, fantastic. Oh, this student also give us all the. Just to do a quick check, who was the one that wrote this? Can you type me if you are the one that actually submitted this marijuana stocks? Who was the one that contributed? Okay, again, I'm not here to punish you. Okay, so yeah. Are you here, the one that contributed this marijuana stock? Okay, no response. Okay, what about Palantir? Who was the one that typed in Palantir? Palantir. Type me if you are the one that typed Palantir inside authority risk. Also nobody. Oh, your type and disappear, is it? Okay. Let me just see any other company. Okay, let's look at the second one, which is actually on science and tech risk. So science and tech risk, we have Apple, Google. Okay, let's take a look at this. Okay, so does Apple actually have got science and tech risk? I think to a certain extent, yes. Okay, because they always have to come out with new technology and new product in order for them to stay ahead of the game. So the moment they stop investing into R&D, you realize that other company can easily just take over that, right? So of course, Google, LMT, Palantir, yes. Okay, Pfizer. Okay, pharmaceutical is very straightforward definitely 100% yes. Same for Meta. Meta right now is going more into the what's that called? Okay, Meta is going into the suddenly I forgot what's the term called. Okay, what's the term called? Okay, yes, metaverse. So now you know I'm not a metaverse person. Okay, I'm still on the real world. Yeah, Meta is going into the metaverse. So again, this area, right, is very, very new. Okay, so it requires a lot of R&D. And of course, like I said, like anything that's new, right, there's always a lot of risk. So there will be a lot of players that are also in this particular industry as well. Okay, NVDA. Okay, interesting. Okay, so quite straightforward lah. A lot of all these tech company, new Intel, Samsung. Okay, Johnson and Johnson. Interesting. Who wrote Johnson and Johnson? Who was the one that wrote J and J? Type me. Let's see. Nobody want to admit. Okay, who typed Johnson and Johnson under science and tech risk? Okay, really nobody. Okay, let me see. Sophie, BIIB. Okay, all this quite straightforward. Airline company. Okay, key person risk. Let's take a look. I think just now we talked about a few. Okay, Tesla, Apple, Mark Zuckerberg. Okay. Okay, very interesting. Let me just talk about Mark Zuckerberg, okay, which is actually on Meta, or some of us we still remember as Facebook. Right. So a lot of people thought that Mark Zuckerberg is actually the key person of the Facebook itself. Right. But if you actually go and research further, if you go and read up on a lot of articles, a lot of videos, right, then you'll realize that the reality is the main person that is actually running Facebook, right, previously is a lady. Okay, anybody know what is the name of this lady? Anybody know the name of this lady? Okay, this lady is called Sheryl Sandberg. Okay, she was the COO of Facebook previously. Right, so she's the one that makes sure that everything runs smoothly, okay, and that Facebook continue to generate good profit, right? But what happened is that, right, Mark Zuckerberg is like the founder and the creator, but what happened is that he is always very visionary. That means he always want to go into the metaverse and everything and all that, right? But the thing is, all this doesn't contribute to the profit. So in fact, right, if you go and ask the people inside Facebook, they don't really like Mark Zuckerberg. They feel that this person is just, a lot of idea, a lot of things and that. But everything, actually, most of the people actually listen to Sheryl Sandberg when it comes to running of the business itself. So if you ask me, does Mark Zuckerberg have got a key person risk? My view is no. Okay? Yeah. So that's the very, very interesting thing about Meta and also Facebook itself. All right, Jeff Bezos. Same thing Today, right, if you go and remove Jeff Bezos from Amazon, to be honest, I believe that for a large company like Amazon, the business will still continue to run. I don't really see a very, very big impact, okay, when it comes to... But of course, like I said, is there any risk? I think that are a certain particular percentage of the risk itself. Okay, so I think it's quite straightforward. All right, yes, I think you guys got the correct answer. Okay, fantastic. I think the ASK, that one is pretty straightforward. I think you guys have actually gotten it quite well. So what we want to do, right, is we want to go back to our Excel spreadsheet as well. So based on the 4 companies that we actually have, okay, maybe y'all can give me the answer. We will do this together. Let's look at Adobe first. Adobe. Okay, does Adobe has got authority risk, yes or no? Okay, no. Okay, no risk. What about science and tech? Science and tech. If you look at your Photoshop, your Illustrator and all that, do they have to come out with new product every year? Okay, some say yes, some say no. But I think Adobe is quite, in a way, they design it quite well. Okay, so personally for me, I think maybe not so much of a high risk. Depends. So again, like I said, it also depends on how much you know in the industry itself. Right. But of course, like I said, maybe right now with AI, right, I think the AI part would have a certain risk. Okay, that might disrupt it. Of course, key person, but I think this is pretty straightforward. So what happens is that you realize that if I put high risk, right, the score will drop. Okay, I just show you guys. Right now, the score is 8 points. If I put no risk, the score is actually 9. So every time I put a risk, right, it will minus 1 point. So if let's say everything is 10, but then I put high risk for everything, then the score will become 7. You understand where we are coming from, right? So even if let's say this one I put as high risk, Can I still buy Adobe? Yes or no? Can I still buy? Can I still buy? The answer is yes, because why? It is still above 7 point. All right, so again, it doesn't mean that it has got a risk and you cannot touch at all. You still can invest in it. All right, as long as the score is above 7. Of course, for Meta, you can see that it's actually below 7 already. So even if I put no, right, technically still we want to avoid for now. Okay, but let's take a look at, okay, so Meta authority risk, actually yes and no. I think previously there has got a lot of so-called, because of data, because they are collecting a lot of data, so in a way they are considered important goods or to the government is considered harmful goods, right? So they are actually kind of regulated by the government as well, right? Then of course science and tech, I would say it's also yes. Key person, personally for me, no. So if you ask me, Meta score is maybe about 4.5. All right. Then of course for Visa, authority risk, I would say no. Okay, then of course science and tech risk is also quite straightforward business. Key person risk also no. Tesla authority risk, I mean they are car manufacturer, so the government I think not so much regulated. Science and tech risk, is it considered high risk or low risk? Personally for me, I think it is classified under, okay, I can classify under high risk because it is still under a new industry which is EV. All right, so I think anything that's relatively new, things are not stabilized. All right, then of course key person, some say yes, some say no. Let's be conservative, we can put as high risk. All right, so I think this is pretty straightforward. Right, this is pretty straightforward. So you guys can also fill in inside your own spreadsheet as well. So while I am filling on my spreadsheet, okay, you guys can actually continue to fill in on your own spreadsheet as well. Right. So let's move on to the second part. Okay, so just now we were talking about ASK. So what we want to do right now is we want to move on to the second part, which is on valuation. Yeah, let me just go to my next slide. Okay. Yes, so make sure that y'all can see my slide. Okay, so right now, okay, what I'm going to show you is actually on this thing called valuation part 1. Okay, let's take a look at valuation part 1. So if you were to relook at the whole process of value investing, right, basically just remember these 3 alphabets like A, B, C. A stands for assess the business. Is this a good company? Okay, and of course B, what is the buying price that I should be looking at? So that is exactly what we are going to go into right now. I think some of you are also asking about, how do I know whether this is a good price to enter, or when is a good price to enter, when is a good time to enter? Okay, that's where the buy price will come in. And of course, last but not least, how can we actually generate cash flow? I think very importantly, especially for some of us, we are near our retirement. So it is not about how much money we have, but it's about how much cash flow we have so that we can actually spend the money every single month. Right? So cash flow is equally important. So we have to understand one very important concept, right? Is that not every business is the same. So you cannot use the same valuation method for every single thing. Okay, you cannot use the same valuation method for the same thing. Okay, for all the businesses. So as a general, we classify business as 3 main category. Okay, asset play, dividend stock, as well as growth stock. I want to ask all of you a very important question. Okay, if you just look at the word itself, like asset play, what do you think it means? This company has got a lot of what? Very straightforward, right? Yes, this company has got a lot of asset. Okay, and of course, when we talk about asset, right, what we are referring to is net liquid asset. That means asset that can be converted into cash easily. So, of course, very importantly, is cash considered an asset? The answer is yes. So what are some of the company that has got a lot of cash? What are some of the companies that have got a lot of asset that can easily, okay, being liquidated into cash? Okay, usually we classify them into a few industry. Number 1, the banks. Okay, the bank is majority filled with cash. Okay, and of course, number 2, we have the construction company. So again, the whole business is all about asset, which is building. All right, and of course, number 3, we look at insurance company. Okay, insurance company are usually pretty cash rich as well. All right, any other industry that are heavy in asset? Anything that you can think of? Okay, Disney. Does Disney have got a lot of asset? Okay, so you realize that, okay, so you realize that, okay, Disney have got a lot of asset. Okay, so Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay, Disney have got a lot of asset. Okay, so you realize that, okay Disney don't really have a lot of asset. For example, if you look at Disneyland itself, okay, if I want to liquidate the Disneyland, how do I liquidate the Disneyland? A bit hard to liquidate. Okay, or if you look at Disney Plus, okay, Disney Plus, which is the streaming of Disney, right? If you go to the company itself, actually there's nothing over there. It's all table and chair and all the programmer and all the movie director. Okay, so all this doesn't translate to real cash. Okay, so again, very, very different in terms of asset itself. That one is IP. Yes, fantastic. Thanks, Ruben, for that. Okay, so bank, as I mentioned, definitely yes. Oil company, definitely, because oil can easily be sold to become cash as well. Along company, investment company, fantastic. Petrol company, real estate, I think we have mentioned that earlier on. Okay, so company that are heavy in asset, they will classify under asset play. Very straightforward. Dividend stock, this is even more straightforward. Company that give dividend, okay, we will classify them as dividend stock. Okay, and of course, last but not least, what will classify them as growth company? Actually, the answer is over here. What classify them as growth company? You look at this, business that are growing at more than 12% and has potential to continue to grow. So we look at the earnings per share of this company that are growing year on year, on average 12%. So if this company is growing at 15%, we can classify them as under growth stock. If they are growing at only 5%, okay, then we don't classify them as under growth stock. So very, very straightforward. Later, I will also show you where can we get the growth rate of the business itself, so you can actually understand. Okay, now, just now we mentioned, after assessing the stock, we want to find a company that are having the business confidence score of more than 7 and add to our portfolio. So importantly is, what is the price to enter? And of course, a lot of us will start to ask, how do we know if the stock is expensive or cheap? I ask you all this question. If I look at this company, okay, GAP, right now is $14 per share. Expensive or cheap, but in E or C? Okay, Sean, great question. Later, I will answer that. Okay, so later we have a short Q&A segment before we actually end off the day. So if you have any burning question that we didn't manage to cover, okay, later I'll invite Glenn back. Then we will do a Q&A together. Okay, so some say cheap, some say don't know. Okay, so I'm not going to give you the answer now. Okay, but I'm going to ask you another one. Okay, if you look at Apple, Apple is trading at $153 per share. Expensive or cheap? Okay, cheap. A lot of people say cheap. Wow. Fantastic. Some say overvalue. And what about this company? Booking Holding, share price $2,480. Expensive or cheap? Alright, suddenly I realized that more people type expensive. Why is that so? Because what, you still remember, the higher the price, the more expensive it is. Okay, but earlier on I've also mentioned, okay, we should not look at the price. Okay, if let's say today, later I'm going to share with you how to valuate. If we valuate Booking Holding at $10,000, but right now the stock is trading at $2,000, is it expensive or cheap? It's very cheap. Okay, very cheap. All right. And of course, the next question that comes to your mind, people will say, Bowen, you say $10,000. Is it possible or not? This company, the share price can go to $10,000. Okay. How many of you, right? Okay, you feel that the $10,000 per share, share price $10,000 is crazy. If you think it's crazy, type C. Okay, don't need to be paiseh. If you really feel that, where got $10,000 one? I go to Singapore Stock Exchange. The share all $1, $1.50, $2, maybe at most $5, $10. Where got $10,000 per share one? Not possible. Okay. Okay, a lot of people say crazy. Yes, I think some of you already know where I'm going to. I want to show all of you something very, very interesting one. Let me just show you based on my Safari. Let's make a guess. The most expensive stock in the US Stock Exchange. What is the price? Hey, for those of you who know the answer, please don't type out. Don't type first. Okay, I want the rest of the people to guess. Okay, especially those that are new. You just guess lah. The most expensive stock in the US stock exchange. What do you think is the share price right now? Hey, your guess lah. No correct or wrong answer one. Based on your personal feel lah, you feel that wow, what is the possible highest price? Okay, don't know. Bitcoin is not a share, right? Bitcoin is a different kind of a pricing lah, right? Okay, but let me share with all of you. Some put 20K. Yes, I think for those of you who know, Berkshire Hathaway A share, which is Warren Buffett company, that is the most expensive stock in the stock exchange. I know a lot of you have already typed the answer in there. The share price is $491,840 for one share. This is not one lot. In Singapore, we always buy one lot, which is 100 share. This is one share. Okay, so one share is 491,000 US dollar. Okay, which is probably close to about 700 over thousand Singapore dollars. Right, can buy a country. Now, if you think this is crazy, okay, let's take a look at the share price of Berkshire Hathaway years ago. Let's say we go back to 2015. Back in 2015, the share price is $200,000. Do you think this is crazy? Many people think this is crazy and say that, hey, Bowen, the share price already so expensive, can go higher or not? Okay, guess what? The price continued to go higher, and okay, it went down first. Yeah, but after that, it goes higher and higher and higher and higher. Yeah, of course, if it go even before, okay, 2000, okay, let's go back to the dot-com bubble. What is the share price of Berkshire Hathaway during the dot-com bubble? Okay, so you can see during the dot-com bubble, the share price from $77,000, it dropped all the way to $41,000. Can you all see? This is a 48% drop. So some people say, wow, crazy already, no more chance already. My share dropped 48%. Okay. But remember, just now we mentioned, right, if you were to buy it at this price, okay, so important see, from top to bottom, right, it dropped 48%. Let's say 50%. But if let's say from here, go back to the price, original price, is it increased 50%? This is the part I want to show you. Very interesting. If I bought it here and it goes back to the previous price, can you all see? It is not 50%. It is more than 50%. In fact, it should be 100%. It should be 100%. Okay, so that is also the power if you actually buy it at a lower price. And when it starts to recover, you can actually make even more money. Okay, you can make even more money. Okay, so same thing lah. I tell you, 70,000, a lot of people say it's crazy, not possible. If I tell my mother I'm going to buy a share, right, that is $70,000, I think she will scream the hell out of me. They say, where got 70,000? Confirm will crash one. Of course, if you look back right now, it's 491,000. Okay, that's why my mother is still a housewife lah. Okay, so nothing wrong with that. So everybody is born and educated in different way. Alright, so very important. Okay, so don't argue with your parents or with your sibling or anybody who don't invest and keep telling you not to invest. Don't need to argue with that, because no matter how you argue, they will also argue back with you. So you just say, good, I agree with your statement. And then you go and quietly go and invest lah. Then you make money already, you also don't show off to them. Okay, so this is very, very important. Right, but I just want to show you the statement is that even back at 70,000, people will tell you that it is very expensive. But 70 will go to 100, 100 will go to 200, 200 will go to $500,000. Even at today's price, people think it's crazy, but I can tell you, down the road, 490,000 will continue to go even higher, because all the business inside the Berkshire Hathaway, they will continue to increase in value. Now, the next question that comes to our mind is, why is it that all this price will keep on increasing in value? Why? Why does the price keep going up? Have you ever seen prices coming down? There's only two reasons. Okay, the first reason start with the letter I. Y'all make a guess. Yes or you know what I'm asking. Yeah, this HK chart. Inflation. Okay, because of inflation, prices are going up. So when prices go up, let's say today you are, let's say lah, okay, 10 years ago, one iPhone sell for $500. Okay, and then let's say lah, Apple sell 100 iPhone lah. So how much money they make? 500 times, okay, 500 times 1,000. That's 500,000. Okay, 500,000 10 years ago. Right now, they still sell 1,000 handphone, but the price of Apple become $1,000 per phone. How much does Apple make? Can you help me to type in the answer? So 1,000 times 1,000, that's 1 million. So because of inflation, prices are going up. So the company will make more money in terms of revenue. So when the numbers, absolute numbers go up, it will also be reflected in the share price. Okay, so that is also one of the reasons, because will inflation ever come down? The answer is no. There will always be inflation. It's just high inflation or low inflation. Now the second thing, what leads to inflation? Anybody know the answer? I think Jackson will know the answer. What leads to inflation? Later we will look at all the different valuation. So we do it step by step. Right now I'll give you some general knowledge first. Population growth, not true. In fact, if you look at China population growth, it is slowing down. It is actually quite, I would say, critical to the China government. Okay, they are quite concerned about the population growth in China because it's really slowing down. Okay, if you realize why Japan actually suddenly from a highly developed country, suddenly it goes all the way down, it's actually because the population slowed down significantly. And because of that, when there's a population boom, that means all these people, they all are like 20 to 40 years old, they make a lot of money, the whole country is booming. Don't forget, these people, at one point of time, they will reach 60 to 80 years old. Okay, where they are no longer contributing to the economy, and they become aging population. And then when the population starts dropping, so what happens is that you have lesser people to sustain all the aging population. So that's where the whole country will actually fall into quite a significant, will have certain significant economic impact. Okay, so you all don't take it too lightly, right? When the government keep asking you to make baby, it's actually because, right, when you make less baby, it has a direct impact on the GDP and the growth of the country itself, right? So that is something very, very interesting. Yes, thanks a lot. Okay, the answer is what Sean mentioned. The government keep printing money. Okay, why is it that inflation will happen? Is because the government will continue to print money. Okay, and when government continue to print money, the value of the money will drop. So last time $1 can buy one item, but because they print so much, right? So that same item, now they say that, now they already print so much, I need to collect more than $1 because the value has dropped. I want to collect $2. Okay, so printing of the money leads to inflation. Okay, and inflation means that prices will go up. And when prices go up, means that the profit and the revenue, all this number will also become a larger number. So naturally, it will be translated into the share price. Okay, because a share price is always a multiplier of the profit or revenue of the business itself. You all understand this or not? So that is also why we say that the stock market will continue to go up higher and higher in the long run. Unless you can stop these two things, which is printing of money, you can stop inflation. If not, the share price will continue to go up. Okay, this is quoted by Bowen New. Okay, y'all can actually put it into your display pic, okay, or put it in somewhere. Okay, just remember. So this is important. Are you learning something so far? If you are learning something so far, type learn. I hope I'm not boring you guys with too many boring stuff. Okay. Yeah, but it's important because why? Last time I also have this question. Why the share price will keep going up? Okay, because a wise man once told me, what go up will come down. So I am always waiting for the time to come down. Okay, but the more I wait, then I realize that no, it doesn't come down. It come down for a while and then it will continue to go up even higher. So I say, well, this wise man not really that wise. Okay, so it's very important to understand. Okay, especially in certain market. So I say, if you invest in the Japan market, once it come down, then it really come down because why? The whole market is slowing down. Okay, but as of now, the US is still growing, right? So as long as the whole market is still growing, then of course there will be opportunity. That's also why we want to invest in the US market. Because if you look at even all the largest China company, where do they want to get listed? Why the China company don't want to get listed in the Shanghai Stock Exchange? Why everybody want to go to the US Stock Exchange? Because that is where all the funds are. All right. So irregardless any country, even if today you own a business in Singapore and you want to become a listed company, do you want to list in Singapore? Do you want to list in Hong Kong or do you want to list in US? Can you type the answer for me? If given a choice, Singapore, Hong Kong or US? If possible, go to the US because that's where more people will know about your business, more investors will invest into your company, and your valuation will be worth higher as well. So this is very, very important. So this is what Warren Buffett mentioned. Price is what you pay and value is what you get. So important lesson over here. Don't just simply look at price. Look at the value that you're actually getting. Okay, look at the value that you're actually getting. And of course, remember, a different type of business, we have different valuation method as well. So this is very, very important. Let's look at Warren Buffett, right? Okay, and some of the companies that he is currently invested. We have companies like Bank of New York Mellon, we have Wells Fargo, we have Nestle, Nebraska, Furniture Mart, Apple, Coca-Cola, Walmart. So we realize that in Warren Buffett portfolio, okay, it has different category also. For example, Wells Fargo is a bank. So bank is under asset play. Then we have Apple. Apple is actually a growing company, so it's under growth. And of course, we have Walmart. So Walmart is actually under dividend because they have been giving consistent dividend. So it also means that when we look at the valuation, we are going to use different valuation method to analyze each and individual of all these companies. Now, if you look at Warren Buffett, right, you realize that this is how his portfolio will look like. In fact, majority of them will fall under dividend company. Okay, companies like Coca-Cola, companies like even Bank of America, they do give very, very good dividend. All right, and of course, I think even for Apple, it does also starts to distribute dividend as well. So these are all considered under dividend play. And of course, asset is also some of the banks. Then we have growth. And of course, for Warren Buffett, he also utilizes options to generate cash flow as well, right? Which is under the BOSS strategy. I think this one, Glenn has also mentioned that I think right now he's applying mainly the BOSS to generate very, very good cash flow as well. All right, so like I said, cash flow is very, very important. So you'll be wondering, where does Glenn learn BOSS? Actually, Glenn learned from Mary Buffett. Mary Buffett learned from Warren Buffett. Okay, so today y'all learn from Glenn. Then y'all can continue to learn this and pass it to more people as well. Okay, very, very powerful strategy. Okay, now let's take a look at the first one, which is asset play. Okay, Sean C. Why Warren Buffett invests quite a lot of Kraft Heinz, but the stock is quite stagnant? Maybe it could be because of dividend. Okay, maybe later we can take a look at that as well. Let's look at asset-based company. What we want to do, right? If you have an asset-based company like bank, like insurance company, like real estate company, we want to buy the business below their asset value, net asset value. Okay, so what exactly is net asset value? It is the amount of money that shareholder get back if the company closed down. Okay, or sometimes we call it the net worth or the book value of the business itself. Okay, the net worth or the book value itself. So how do we actually get the net worth, the book value? It's all the same term. Okay, we take the asset minus away the liability. So all the cash, all the receivable, everything those asset, right? We minus away the money that they owe to the creditor. Okay, so asset minus liability, that is your net worth. Okay, or book value or equity. Just different name, but they all represent the same thing. So if you are able to calculate the net asset value